Hello, good afternoon, and a very good evening to all of you, depending on wherever you're watching me. And today I'm live with this live session to talk about a couple of things that I believe is requires importance and that people should take notice of in this bull market that is going on. That somewhere you will get caught, and the signs were always there. So I would like to discuss in slight detail about what has happened with UPL. I don't want to go into the reasons as to why it happened, but I would just like to discuss about the signals that the stock already gave while in the last 2 3 months. So we'll talk about UPL. We'll also talk about IRCTC OFS, and on both these factors, I have written on Patreon, and that's why I would love to have Patreon membership there or members there. They will get the news of it or anything that I have in my mind immediately there. So, in my opinion, what you need to do is analyze about the factors for which a stock has fallen a lot from the highs, and then just reflect upon the news that comes out afterwards. Uh, so, in the case of UPL, what has happened is over the last 3 4 months, the stock was relentlessly falling even before that. So, last, you can say about 8 9 months back, the stock was trading at 750 800 and all that. I mean, at the start of the year. And then we had the fall that we had in February, March, and the stock fell. But then there was a sharp recovery in the stock, and then the stock started falling again for the last at least 2.5 months, as far as I remember, 8 10 weeks. And there was news of the auditors resigning, which the promoter has refuted because the consolidated auditors are, I guess, Deloitte, and they have not resigned, or I guess KPMG, and they have not resigned. But overall, there were rumors of a lot of things happening in the company, and that's why the stock was not rising and was capitulating. In fact, it fell below 450, went to 430, 400, I think even 380, like that. And then there was a sharp recovery, and even I had the opinion that once it crosses 450, 460, we could see another sharp up move, and that is what happened probably a couple of days back. And the stock kept rising higher, and then today in the morning, we get that news of the UPL, some sort of an issue with the rental space that the promoter is using. It is from a entity that is not quite recognized that well, and all those things. I don't want to get into details, but if you look at the stock per se, you would understand that the signs were always there, and that is where I request for a little bit of caution from all investors whenever they ask me questions about many stocks. There are many stocks that had checkered past. About 6 years back, 7 years back, we had the same, not the same issue, but different sort of issues. But there are governance issues that are with other companies. There's a pharmaceutical company that now people are looking at. Quite eagerly because it is going up, and it had big issues in 2011 12. Then you get to hear about one company which is into mid cap, was in mid cap IT and was doing extremely well during 2015 to 17, during the Aadhaar card, you can say, issuance, etc. And now it is in doldrums, and people want to buy into it because maybe the promoters have changed, maybe things have changed. You need to recognize one thing: when there is a dent made to a company, and which is a bigger dent with respect to corporate governance, it is very difficult for that company to come back to the same mojo, unless it is Satyam, which got bought by Tech Mahindra in 2013 or so, 12 13. unless you're that, I don't see any other company coming back with a vengeance in that manner. People would talk about Tanla Solutions, but Tanla had other issues with only one customer in 2007-8. That was Nokia, and Nokia went underground. Tanla went to 4 rupees. So that was not a corporate governance issue. That was a total business collapse that took place, and we saw what has happened with the stock later on. So what has happened with UPL, we will know about it later on. We would know about it probably in the next 3 to 6 months. But remember, in this market with algo trading, with everything that is happening online, with all the news that is filtering in, everybody knows about most of the things pretty hands on. So what happens is people sell or buy first and then think about it later. And I'm talking of large investors. So they go ahead and put in a big chunk immediately, and then we'll analyze about whether it is results or news or any corporate development, any expansion, etc. later on. So when this news broke out of UPL, the stock was at it's crossed to 460. It was at 490, 492 yesterday. Now you look at the stock, it is down around 12, 13%. uh, it is in complete, you can say, tailspin at the moment, and the stock has settled around 425, 428 for sure. But that doesn't mean that this is a buying opportunity. And I've given that to other, you can say, Patreon members as well. If you are invested, even if you're losing 20, 30, 40% in the stock, you might be losing something like 10 to 15% at most if you would have bought just a day or two back. Better to exit and then analyze everything later on, even if it means that buying the stock at 500. Yes, the company is good, everything is good, but I have seen companies go completely upside down after such sort of rumors come out, after such sort of news come out. And you won't be surprised if the stock is down 70, 80% from these levels, say 6 months down the line. We don't know whether the promoter is right or wrong. We don't know whether these rumors are right or wrong. They might not be. You might see the stock at 600, 700, but it's better to be cautious because this is hard earned money and you don't have a, you can say, a regular income coming through to invest into the market. You are not a PMS, or you're not a some mutual fund that you'll get the fund so you'll make up money by investing into something else. At least I am not, and that is why I believe that people should be always cautious in buying into mid cap, small cap stocks. And this is the biggest reasons why I say that invest 5% to 10% maximum. This is the biggest reason when I say that you buy good quality large cap, good quality mid cap consumer oriented companies rather than buying into any other sector, because those companies have a little bit better corporate governance things. Although we have seen even consumer companies, beverage companies making fraudulent, you can say, income statements, etc. We have seen those things happen. You cannot avoid that, but you can minimize that. So, with the example of UPL, I would say uh, one needs to understand how the tape is saying, how the stock is behaving. That tells you a lot. So, the stock was falling a lot from, say, last 1 year. It wasn't that the stock was doing very good things and that the stock was putting the market on fire, etc. So what took place was that the stock went from something like 600 odd in February all the way down to 250, and then the surge took place, and the surge took the stock back to about 500, 510 in September. From September, so how much time has passed? This is December. So this is nearly 3 months. 3 months. For the last 3 months, there have been rumors about the company, there have been rumors about the stock, and the stock had relentlessly fallen. So the stock had given you 3 months to probably exit and think about what is happening later on. or probably keep a stop loss. So if somebody had bought at say 480, keep a 10% stop loss at 440, 450, exit, because the stock went on falling and went to something like 380 odd, around 380, and then the recovery started. So this was the second recovery which really sink people in, I would say. And that is where one needs to be very careful. So if the stock had fallen from 480 to 380, with the market surging, with mid cap and small caps also surging in the last 2 months, you need to have an understanding that okay, something is going on, something is happening which we don't know about, and the stock price is not telling you correctly, and so it's better telling you everything actually, and it's better to exit. Many companies, things happen like this, and they give signals. The charts give you signals on most of the occasions. So if you're buying into 20 such companies, at least 16, 17 of those will give you indication with what is happening in the stock. So be very careful as to what is happening. I would say exit UPL immediately. There could be a chance stock will recover. There could be nothing that comes out of all this, and the stock would be at 700. But what if the stock goes to 100? Then what would you do? So rather than looking to make quick profits, you need to probably save your money in that regard. So that's about UPL. The second thing I want to talk to you about is IRCTC, and I came to know about it just last night that they had issued an OFS at, I think, 1367, 1368, round about those levels. I think government is probably selling the stake at very low levels, and it would be lapped up. I have no doubt that it would be lapped up big time. The stock currently is, I think, around 1500, 1480. I didn't check the price. So again, for my Patreon members, I put that up at around 830. If it is possible with you with respect to the credit card thing, kindly use that and become a Patreon member. It's safe to use it there. And I'm sending you the link. So on Patreon at around 9 o'clock, I put up the feed that it's better to buy IRCTC in this fall if the stock falls below 1450. It certainly did. It went to 1405, 1405, and even I have bought into the stock, and most of the Patreon members know about it. So that's a disclaimer, but I think around 1450, 1500, these are very good levels to enter if you have a 2 year time frame. I'm not talking of 2, 3 months. Over the next couple of years, I won't be surprised if the stock is up 60, 70, even 100% from these levels, because things will normalize hopefully by end of next year. I am not saying things will normalize the day first person gets vaccinated here in India. It will take time, probably at least 12 months. But then if you have a 2 year time frame, having a return of 60, 70% in 2 years is not bad. I see little downside in the stock. Probably if you buy at 1500, you could see 1350. I'm not saying that. So that's a 10% downside with a chance of a 50% upside. That's what I'm looking at. So 1:5 risk reward ratio here. Decent company, and this is the only sector that has not run up still. So won't be surprised if the stock is trading at 2300 odd by next December or so. So that's about IRCTC's OFS. It's good that it will be out of the way. Probably they'll sell more stake going forward, but not in the immediate future. So in that regard, there have been a lot of discussion about when the OFS will come, what price it will come, and all those things. So that is now out in the open. So that is one, you can say, monkey on the back of IRCTC that would be off their backs. And in my opinion, once all this ends up in the next 2, 3 days, the stock will have a smooth journey upwards. That's my opinion. Again, consult your financial advisor and discuss with your family, friends, etc., and whoever you trust the most, and then invest into any company that I talk about. So that's about the two companies that I wanted to talk to you about. I'm ready to answer your queries. Please use the super chat feature. It will help me grow the channel. It will help you also ask me questions in greater detail. Uh, all right. Avoid Savita oil. That's my opinion. Again, one more point I want to say. It is not that most of the investors don't know about all these companies that a lot of people are asking me about Datamatics, Savita Oil. There have been other companies that are, you can say, Nitin Spinners, for instance, and many other companies in different sectors that only perform really well in very very buoyant markets. That's it. So they'll perform for 2 3 months, then they'll go back to the same price, or at least 70% back to their same price, and then they'll stay there for years. So I give you an example of Nitin Spinners. It went to 105 in 2015. It went to 140 in 2017, in that mad bull run of the mid and small cap, and then it went back to 40 rupees. I think even below that, I think it went to something like 35, 40 or so by 2020. So in 3 years the stock fell from 138 to 38. The stock fell something like how much is that? That is 60 70%. Now the stock is back to 63, 65. It may go to 100 again, and then will again come back. So be very careful investing into small caps, and just read the history, just read the charts of those stocks. They might just be only bull run big players. It's like players who make big runs on flat tracks and struggle in difficult circumstances, in seaming conditions in England and New Zealand, or in bouncy conditions in Australia or South Africa. So better to avoid stocks or players who are not good in all conditions. It's as simple as that. And that's why people love Virat Kohli, and probably avoid looking at other players who only make runs in particular conditions. Just giving you an analogy, better to invest into companies which could be consistent compounders, even if they are not going up 5 10% each day. So again, Savita oil, and avoid. Frontier Springs, a disclaimer, I'm invested into the company. It is attractively priced. I'll come up with a detailed video on the same probably in a couple of weeks' time or so. I'm making that up. So yes, if you are ready to take some amount of risk, 110 crore market cap company for a 5 6 year time frame, not for a year's time frame, is a good stock to buy into. All right. Neogen Chemicals is good. Again, chemical stocks have run up a lot. Few I do like. I have kept on saying SRF is very good. Alkyl amines is good to an extent. Galaxy Surfactant to an extent. Next 2 years could be a decent company. Vinity Organis, a very good company to get into. So some companies are Aarti Industries, for that matter. Some companies are good, but not to get deep into that sector, because I have a feeling that it will be complete 5 years now of the sector bull run. In 2015, early part of 2015, nobody knew about many companies in the chemical sector, except a Pidilite and a UPL, for that matter, into agrochemicals. Some knew about agrochemicals, but not into deep into chemicals. So 5 years of bull run in the sector, probably a sector runs for 6 years, one more year to go. So be very careful in that regard. Iron exchange is good again, but the economy needs to perform for the iron exchange stock to perform. Keep that in mind. Apollo Tricot is a good company. I have to look at Transpec, but Apollo Tricot is a good company. Again, the run up has been huge, so wait for declines again to buy into it. MCX is good. BSC over 10 years is good, not 1 or 2 years. Uh, that's my opinion on BSC. All right. Again, Deepak Nitrite, in my opinion, is expensive compared to other companies that you look at, but then take your own call on it. Sanofi is really good. Procter and Gamble, Sanofi. These are companies to invest into for 10, 12, 15 years, not for 2, 3 years. They might not perform that well for 2 to 3 year time frame. Yeah. Uh, Motherson Sumi, I think it can move further. Keep a stop loss. So keep a stop loss at 143, 144, round about that. You never know when this rally begins. And I have put up a video well before this rally when it began about auto ancillary. So was bullish on Motherson Sumi at 100, at 80, at 90, 110. I'm bullish even now. I won't be surprised in a year or 2 years time. 248 is possible on the stock. 240, 245. But be careful, keep stop losses and trail your stop losses. Britannia, very good company to invest into current price. I think Britannia, HULs, and the likes would perform in 2021. I think they have not done that well over the last 2, 3 months. Consolidation may continue for a month and a half, and then the big move may begin in these stock. Uh, Ashok Leyland. I would say it's expensive at these levels. So probably if you buy, keep stop losses in a place. I don't have any comment on GRM overseas. I don't know about the company that well. So once I know, I'll talk about it. Asian Paints entry level, I don't know. Probably enter now a bit. At 2300, buy more. At 2100, buy big. At 1500, I was a big, you can say, a promoter of Asian Paints being bought at 1550, 1600. Nobody or very few did. Uh, Now it's difficult. Birla Soft, I like the company on declines, can be bought into. Kilpest is a good 5, 6 year story, 4, 5 year story. It's see the COVID story in Kilpest is over, and that has been I'm telling time and again that the story of testing and everything is over in those companies. But the company per se is into a lot of domains, into exports, etc. So I have a 4, 5 year time frame. The stock could really perform well. I don't have any targets in mind. Rajesh Exports, avoid another stock that does really well in huge bull markets and doesn't do well, uh, you can say consistently. Tata Elxsi is good. Tata Teleservices is good on declines. Moltec Packaging, very good company, again on declines, can be bought into. Trident is an avoid, in my opinion. All these textile companies may perform at this point of time, may not do for long term. Thanks a lot. Thanks for being online. Would be online for a larger period of time on Sunday. Thank you for being online. Please subscribe to my channel.